Hello, good day, ladies and gentlemen. My name is Wan Ching from Inti International University, Malaysia. My research title is Capital Structure and Corporate Performance of Listed Healthcare Company in Malaysia. The purpose of the research is focused on describing the dependence variable phenomena under research, which is corporate performance, and the research will evaluate the influence of capital structure and three factors towards corporate performance of listed healthcare company in Malaysia. The research will collect from 24 of listed healthcare company in Malaysia from year 2018 to year 2020. The measurement will be based on the calculation of financial formula, and the research utilized the quantitative analysis using appropriate statistical technique to examine the influence of capital structure on corporate performance. The presentation of the research will follow the outline sequence as shown in the slide. Then I'll proceed to the introduction of the research. Corporate performance is defined as within the specific period how many monetary targets achieved association. It can also be defined as effort to achieve financial obligation to measure the organization arrangement and the method of achievement rightly, while capital structure is related to a corporate financing structure and all the financing factors involved in the structure. Next, the problem statement of the research is the capital structure affect the corporate performance, distress and performance negatively or positively depend on the capital structure. Miller confirmed that depth of capital in firm capital structure will increase the risk of bankruptcy, which is a negative toward the corporate performance. The higher level of indebtedness for a company could transfer a higher risk on the shareholder. They will require higher opportunity costs from the corporate. Several researchers stated that capital structure has weak to no influence on the financial performance of listed firms. So the 6 research objectives in the research are to examine the relationship of the debt to total asset ratio, debt to total equity ratio, and long-term debt ratio on ROA and ROE of listed healthcare company in Malaysia. For the literature review on capital structure debt to total asset ratio, the calculation of the standard ratio is done with the total debt and total asset of an organization, which prove the organization well they are financed by borrowing and also measure the extent to which corporate protect creditors' interest in liquidation. The investors are worried and easily to get influenced by the corporate profitability, as investors want to ensure the corporate has enough resources and capital to the vision and mission, as well as sufficient development capital to convert investment into profit. So on the debt to equity ratio, total debt shows the proportional of those financial who lend the firm against holding debt securities such as bond, debenture, and other financial assets. If the equity used can cover all debt owned by the company, then the company does not need to use the asset to own the cover those debt. Then use the corporate asset can affect the level of profit to be obtained. On long-term debt ratio, the asset structure influence the capital structure as funds are needed to make investment on fixed asset and current asset, while for fixed asset investment, long-term sources like an issue of equity, debentures, or preference are used for current asset investment. Long-term debt are relatively more and employing higher proportional of employee could lead to low profitability. On corporate performance refer to the benefit created by business activity during a certain period, which is mainly evaluated by asset operation level, profitability, debt paying ability, and growth. The profitability ratio can be measured through some indicators such as ROA and ROE. ROA is used to measure the company capability to create profit using total owned asset by a company in the future. Higher ROA of a company performance will lead to more effective company. ROE is used to measure the company capability to create profit on overall owned capital and calculate based on division of net profit after tax and total equity. Not to mention, there are gaps identified. There is a lack of in-depth quantitative research on the impact capital structure as measured by debt to total asset ratio, debt to total equity ratio, and long-term debt ratio to a corporate performance, including profitability ratio, solvency, operational capability, and growth capability. Some scholars study the capital structure of enterprise by analyzing the equity structure only. Capital structure can be equated with equity structure, but other financial ratios should be considered, such as debt to total asset ratio, long-term debt ratio, and cash to debt ratio. So the slide shows the diagram of the theoretical and conventional framework. The details of the relationship will be explained in the following slide. There are 6 hypotheses in the research: debt to total asset ratio, debt to total equity ratio, long-term debt ratio has positive and significant relationship with return on asset and return on equity of listed healthcare company in Malaysia. So let's proceed to the data analysis. For the first analysis that I carry out is preliminary analysis pilot test. 10% of random selected data among samples to proceed for pilot test due to sample size population, as pilot test only take 10% of the total sample size. Therefore, 10% of 24 sample is 2.4, and the pilot test will be run on randomly selected 3 companies from the data collection. So according to Cooper and Slender, the corporate alpha value for the internal consistency test for full data collection must be more than 0.7 and is considered to be a reliable and relevant item. So the result of the research corporate alpha value is 0.87, which means it is accepted to proceed the study. This study will collect financial data of 24 listed healthcare companies listed of Malaysia and year 2018 to year 2020. The financial data mainly come from the official website of the stock exchange and the annual report released on the company website. So based on the listed healthcare subsector in Malaysia are listed in the table below, which are 37.5% of healthcare equipment and service, 33.337% of healthcare providers, and 29.16% of pharmaceuticals. Moreover, the test-retest reliability test is included of the research. So the full data repeat for major year 2018 to year 2020. The result of the corporate alpha value in 3 years are higher than 0.7, which are 0.773, 0.760, and 0.703 respectively. So the relationship of capital structure of company performance were confirmed by and examined using MLR, multiple linear regression analysis testing. The MLR testing, also known as hypothesis study, is to find out the relationship of capital structure and company performance, taking company performance ROA and ROE. If the p-value less than alpha 0.05, then we assume it's evidence that at least one independent variable affects dependent variable. If the p-value more than alpha 0.05, then assume it's not independence and no linear relationship. According to the MLR results show that overall there is no significant linear relationship between 3 independent variables with ROA, which is DAR, DER, and LDR. The p-value is 0.33, 0.15, and 1.08 respectively. So that you can see more than 0.05, so there's no significant linear relationship. The resultant equation from the analysis are shown in the slide. So now in the MLR testing for ROE, according to MLR results show that there are significant linear relationship between DAR and DER with ROE. Wow, there is no significant linear relationship between LDR with ROE. As you can see in the table below, number 1 and 2 between DER and ROE, the p-value is 0.036 and 0.012 respectively. And for the LDR with ROE, there's no significant linear relationship with p-value more than 0.05. So this is the resultant equation from the analysis as shown in the slide. So in conclusion, the research is mainly introduced and analyzed the statistical analysis of the financial data from 24 listed healthcare companies in Malaysia from year 2018 to year 2020 and explore the relationship between DER, and LDR toward the company performance through factor analysis and regression analysis. There are significant linear relationships for DER and DER with ROE. However, there are no linear relationship for LDR with ROE and DER, LDR with ROA. With this finding, it can indicate that company performance value is actually affected by some other factors such as liquidity ratio, dividends policy, and other factors. So this is a summary of hypothesis testing result. As you can see, H2 and H4 debt to total asset ratio has positive and significant relationship with ROE of listed healthcare company in Malaysia is accepted, and H4 debt to total equity ratio has positive and significant relation with ROE of listed healthcare company in Malaysia is accepted. So the recommendation of the research, the healthcare industry in Malaysia lack of competitiveness and the comprehensive facility compared with the international market. So it's recommended in the future, the researcher may further study this healthcare sector for longer period, which at least 5 years to get the better consistency result. And the future research direction suggests cover long period of the time for the data collection. More independent variable factor for healthcare financial performance should consider and cover in order to find out more relationship which could influence company financial performance through multiple linear relation. Increase in sample size could increase the consistency for the result, and the result relation between independence variable and dependence variable appearance. So that's all for my presentation. Thank you.